Let's talk about your property taxes being due and paying them when doing a refinance. So to be very specific, this video is for individuals that are refinancing a home in Texas between October and January 31. So why do I give you those dates and why am I that specific? Because just to make sure we're very clear, when refinancing between the months of October and January, and really just October is kind of like the big surprise people don't know about, but October is when in Texas, property taxes get posted. And as soon as they get posted, they are considered due. So in other words, in October, and it could be the first week, it could be the third week. Sometimes it might even be November. But the reality is what I've seen lately, the last few years, is that it is typically early to mid-October is when the property taxes get posted. Now, a homeowner is going to say, well, hold on. I don't pay taxes till December. That's true that you're allowed to pay taxes all the way through January 31st before they're considered late. However, if you're doing a refinance, those taxes will need to be paid at closing. And you can get grumpy all you want, but it does not matter. Here is why. In Texas, when a title policy, which all lenders are going to require, when you get a title policy, there's basically an endorsement in there that basically the title company is saying, hey, property taxes are good and paid. And if they're due, I mean, once they get posted, they're due, you have to pay that at closing. It sucks. I'm sorry. I can't help it. Don't shoot the messenger. But at the end of the day, you can say, man, I usually pay it in December or January. I got a tax strategy with my CPA. Love you. Don't care. If you want to close on that refi and taxes are due, you're going to have to pay them at closing. So let's take a couple scenarios. Scenario could be if you just pay, you do not have an escrow account currently. So if you don't, makes it a little easier because you just write a check and it's part of your closing, or maybe you roll it in. But the reality is you were kind of expecting it. Yes, it's a little earlier than you wanted if it's October, November, but you just write the check. So if you don't have a current escrow account, it's a little easier and a little more palatable. Here's the challenge is when you do have a current escrow account, because if you have a current escrow account, you have set aside with your financial mortgage servicer a piggy bank that has money in there to pay property taxes and pay homeowners insurance. That exists. That money's real. It's there. The problem is when you're closing on your refi, if the mortgage servicer hasn't yet paid that bill, you can't make them pay it. And even if you could, you then have to wait for it to actually hit the bank account of the taxing authorities to then have it clear. So it could take a long time to show that. So the problem is at closing, you have to pay the taxes. So it could just be you got to write a check or roll it into your loan amount or do something to accommodate those taxes getting paid at closing. Then when the loan has closed and funded and your mortgage servicer is notified hey, this mortgage no longer exists, the money that's in that piggy bank, that's in that escrow account with that old mortgage servicer, they will then refund every penny to you, the homeowner. So essentially they're kind of giving back the money that they had, which should hopefully basically make you close to whole for the money you just had to write for the property taxes. And the reason why it won't be perfect is because, again, taxes may go up, may go down. There's always this, payments in arrears, skip payments, other stuff that's beyond the need for this video. But the point is, it will make you grumpy. I understand it. It's not the end of the world. And actually in a good way. So let's glass half full, right? This is kind of a way to do a mini, and I'm using air quotes, a mini refinance, cash out refinance. Because let's say an escrow account has 10 grand in it, right? So maybe there's $10,000 in that the current escrow account. When you go to closing and you got to pay your property taxes and it's, 10 grand for property taxes, maybe, or maybe it's 8 grand, doesn't matter. Whenever you go to pay the property taxes at closing, maybe you can roll that into your loan amount so you don't actually physically have to write a check. And then after closing, the cash from the escrow refund can come straight to your bank account. So that's cool, right? It's actually kind of getting a little $10,000 cash out in this example, 10 grand. So it's whatever that number is. So it can be considered like a mini cash out when doing that. So just understand, we're just the messenger. I don't want to make you have to do it, but the reality is taxes, if they're posted and due, they have to be paid at closing. So I hope that answers some questions. If you do have thoughts, comments, concerns, please reach out to the Mortgage Mark team. We're here to help. And as always, when you think mortgage, think Mark.